Welcome to the AI for Technical Writers podcast by Curt Robbins, where we help you get smarter than your competition. This is episode 123. I'm Fred, and as always, I'm here with Daphne.
Great to be here, Fred. Today, we're looking at what was probably the biggest stress test for the entire AI economy this year.
That's putting it mildly. The stakes felt incredibly high. We're talking about Nvidia's Q3 earnings report and, what it means for those pervasive AI bubble fears.
Exactly. The big question was, is this demand real or is it just hype?
Our sources for this are some really insightful professional excerpts on LinkedIn, mostly compiled by Jake Perez, who's a senior editor at LinkedIn News. That was all published on November 19th, 2025, along with posts from several other industry experts.
And we should definitely mention this topic was suggested by our producer, senior technical writer Curt Robbins. He pointed out, and I think he's right, that the implications here for IT infrastructure, for hardware purchasing, especially for technical documentation, they're just enormous.
Yeah, this report basically sets the trajectory for the next couple of years. So, okay, let's get into it.
For months, it felt like the idea of an AI bubble was hanging over every single tech conversation. The real question was, is this astronomical demand for chips coming from real enterprise spending? Or are companies just buying them to look good for investors?
And that's what's so fascinating. Analysts weren't treating this like a normal quarterly report. They were calling it a stress test, a referendum on the whole tech economy. Investor skepticism was really high.
You could really feel it in the market. I mean, we saw some very high-profile people betting against Nvidia.
Right.
You had SoftBank, Peter Thiel's hedge fund, and of course the famous short seller Michael Burry. When that kind of money moves, people get nervous.
And yet CEO Jensen Huang just, completely dismissed it on the earnings call. He said there's been a lot of talk about an AI bubble. From our vantage point, we see something very different.
And the numbers seem to back up his vantage point.
Oh, they do more than back it up. So let's talk numbers. What do they actually report?
Record revenue, $57 billion for Q3.
And the estimate was, what, 55 billion?
Just under 55, yeah. So they crushed it. And then they projected $65 billion for Q4.
Wow. That's not just growth. That's like continued acceleration.
And it's profitable acceleration. That's the key. Net income, actual profit was up 65% year over year. $39.1 billion.
Okay, so the top line numbers are incredible. But for our audience, the IT pros, the tech writers, what's the most important number in that report?
It's where the money came from. $51 billion of that revenue came from one place: data centers.
So it's pure AI infrastructure spend.
Exactly. It's not gaming. It's not crypto. It's core AI. That tells you that hyperscalers, cloud providers, big companies, they are all buying in big time.
This is what really gets interesting, right? The actual hardware demand behind those huge figures.
Right.
Huang said compute demand is accelerating, that Blackwell chip sales are off the charts.
And there's a great piece of analysis from Bank of America that really confirms this. It tackles that fear of companies overbuilding data centers.
What did they find?
Cloud GPUs are completely sold out.
Okay.
And not just the new ones. This is the amazing part. Even the 6-year-old Ampere GPUs are sold out.
So it's not just speculative buying of the newest tech.
Yeah.
It's a real supply crunch.
It's a genuine market hunger. And that gives them the confidence to make these, just astonishing projections.
Their CFO, Colette Kress, said we're still in the early innings.
A bold claim, but then they backed it up. They said they have visibility on $500 billion.
$500 billion.
Yes, $500 billion in revenue from their Blackwell and Rubin platforms just from the start of 2025 through the end of 2026.
That's not a market forecast. That's a sales pipeline.
It is, and for us, the system-level details are just as important. The value of each system being installed is going up.
Right, from around 25 billion for the Hopper generation
to over 30 billion for Blackwell, and she said likely higher for Rubin.
So for technical writers, that means the complexity is just exploding.
Precisely. We're not just documenting a server with some GPUs in it anymore. We're documenting these massive integrated supercomputers. The documentation challenge grows exponentially.
And the adoption details confirm that. The report mentioned a really strong Blackwell Ultra ramp.
And here's a detail that really jumped out at me. The GB300, which is the high-end, more complex chip, it's now making up about 2/3 of all Blackwell revenue. Customers are choosing maximum performance, not the cheaper option.
Which, again, translates directly to more complexity and more need for clear, precise documentation.
And they're doing all this while keeping gross margins in the mid-70% range. That stability is key for the long haul.
Let's take a brief break for a special message from our producer, Curt Robbins.
Hi, this is Curt Robbins. First, thanks for listening. I truly appreciate your support. I want to let you know that I'm currently accepting new clients. My rates are affordable, and I have more than 25 years of experience working for enterprise companies like Microsoft, Northrop Grumman, Oracle, PNC Bank, FedEx, USAA, and Wells Fargo, among many others. If you want to improve your IT documentation and communications, hire me. I deliver fast, know how to use AI to improve efficiency and accuracy, and love going the extra mile to satisfy my clients. Thank you for subscribing and listening. Back to you, Daphne and Fred.
Welcome back to the AI for Technical Writers podcast.
Okay, so before the break, we established this incredibly robust financial picture for Nvidia.
Right, demand is real, the numbers are huge.
But those numbers don't exist in a vacuum, you know?
Yeah.
There are some really important geopolitical factors and other caveats we need to talk about.
Absolutely. And the biggest one has to be China.
For sure. With all the current export controls, Nvidia is basically locked out of that market for high-end chips. Huang himself said their forecast for data center revenue from China is, and I'm quoting, zero.
It's a huge potential market to just write off.
It is, but they seem to be making it up elsewhere. The report mentioned they got approval to sell 70,000 advanced AI chips to companies in the UAE and Saudi Arabia.
So as one door closes, others are opening. Sovereign AI is becoming a huge trend.
Exactly.
But let's also be realistic about the growth. It can't keep going at this pace forever.
I know, and it's not. The rate is slowing down. I mean, it's slowing from a ridiculous 114% to a projected 59%. Still massive growth.
But it's a change in trajectory, a natural one, for a company this size.
Right. And we also have to acknowledge some of the internal critiques from the sources. One analyst warned about smoke and mirrors.
What do they mean by that?
The idea that some of this revenue might be more based on, say, exchanges of promised deals between tightly linked AI companies rather than hard cash from outside customers, a kind of circular investment.
An important thing to keep in mind, for sure.
And that skepticism really leads us to three deeper, more philosophical questions that one economist, Norina Hertz, brought up.
Okay, so moving beyond just the numbers.
Right. First, what does it mean for innovation when one single company becomes the gatekeeper for the entire AI era? They control the means of production.
That's a huge concentration of power. It creates massive barriers to entry for smaller players.
Definitely. The second question is about who benefits. The upside of the profits goes to a very narrow group of firms and shareholders.
While the costs.
The costs are shared by everyone. Massive energy and water use, labor market disruption.
The classic centralized gain, decentralized cost problem.
You got it. And that brings up her third and maybe most important question. Are we mistaking an infrastructure boom for guaranteed social progress?
Just because the demand for chips is real doesn't mean AI is being used to solve humanity's biggest problems.
Exactly. The financial metrics only tell one part of the story.
So after all that, what does this all mean? What's the final takeaway?
I think it means that, despite these really serious long-term questions, the financial evidence is clear. The demand for AI infrastructure is real, it is robust, and it's not slowing down anytime soon. All the reports agree. The AI trade is still in its early innings. For technical professionals, that means get ready for more complexity, more platform lock-in, and a ton of work documenting these incredibly powerful systems.
The foundation is still being built, and it's being built at a furious pace. That's the key takeaway. Thank you for listening to the AI for Technical Writers podcast from Curt Robbins, where we help you get smarter than your competition. Remember to like, subscribe, comment, and share. We'll see you next time.